Welcome to the halftime report, tackle trading community, tackle trading land. Got a full crew with us this morning. Frank and Noah, I mean, that's all I need to say right there. Any show with Frank and Noah is guaranteed to be a quality show. So
appreciate that.
What's the most exciting thing since, because I'm never going to ask a pleasantry because I really don't care. But what's the most exciting thing you guys got lined up for this weekend? Because we're no football this weekend.
My most exciting thing is getting ready for the Super Bowl next weekend. So no excitement for me this weekend. I'm not a very exciting guy, as most people will tell you. So 2 back-to-back weeks. I'm gonna have an exciting Super Bowl though.
Well, you know me, I've got dinner plans with friends, all kinds of fun stuff planned this weekend, mostly getting outside.
Oh my goodness. The weather here in Utah is absolutely bleak and terrible. I'm fantasizing about Naples, Florida right now.
Yeah, I was gonna say, go outside.
Go outside.
What's
that crazy? That's crazy talk.
You look outside and it is literally, I wish I could take a snapshot. I'm looking out my window right now. It is the most bleak weather.
Well, they've got these amazing things just like 10 miles from here. You just drive up the canyon and all of a sudden it's not bleak. It's beautiful.
Is there snow?
There is snow, and there's things to do on it, like ski and snowboard and sled.
That sounds terrible.
But I'll be doing some video gaming if someone's interested.
All right. So the big question on my head in analyzing what's going on in the market right now, this is the story right now, the coronavirus. I wake up to headlines saying traders shrug off coronavirus scare. I mean, those were morning headlines. 2-3 hours later, I'm seeing the same companies put out headlines, coronavirus fears take over market. Within a matter of hours, completely bipolar headlines.
Well, it's kind of like the Super Bowl, right? Don't they just prep up headlines both ways and T-shirts for both championships and et cetera, and then they just run whichever one's at the moment fitting the bill?
This coronavirus is starting to dominate, especially you have your outlets right now, like the Zero Hedge. Literally, these people are the most disgusting, quote unquote, journalists on planet Earth. If I read Zero Hedge headlines, studies signal that 65 million people could die from coronavirus. Chilling outtake on what the corona outbreak could be. So whether you are a doomsayer like Zero Hedge, these disgusting, vile creatures of the universe, they're literally the most disgusting human beings I know, stoking on the fears, or you read market headlines, whatever your take on it, the coronavirus is dominating more and more news space. So what's our latest tally right now? What's going on with the actual facts on the ground?
That's a good question. I don't know. I got all my information from Zero Hedge.
Well, then we're all doomed and we're all going to die tomorrow. So
I believe last I saw head count was still at 17, but I have not done an updated search on that. We might want to do that real quick.
Yeah, but there's certainly the headline that I saw just a little bit before we kicked off was the second confirmed a second case, and they're monitoring 63 patients under investigation in the U.S. So that was the headline that I have most recently seen.
We're up to 26 cases, 26 confirmed cases. Hold on. Doesn't necessarily say.
So we got a little bit of spread right now. I mean, the headlines I saw indicated that, fatalities have went up in China. We did have the second case here in the United States.
Here's one for you. 14 people test negative in the UK. Is that?
But we have a news event that is impacting the market.
Mm-hmm.
How do you trade? Because I mean, we've had a couple instances in the last 2 years, mostly involving the trade war, where a news story, a news headline, this narrative takes hold for going on multiple days. How do you trade when a narrative starts to really take hold in the market?
Well, I can give you some pretty good examples from just kind of what I've been doing. One of the first things I've been doing, which is the market showing me topping signs already. Like I've been seeing some topping signs. I've been tightening up stops. I've been making adjustments to reduce my directional exposure, increasing theta positions that to help, keep the cash flow going. And then I'm ready on the spot with a little bit of delta hedge for the portfolio where needed. And then I don't think there's any one magical way. And I have not really been a reactionary to the news per se, as much as I have been looking at the overall context saying, okay, hey, this market's already top heavy. Corrections due from a technical perspective. Now we're seeing it kind of, give us a couple of red candles. And today's we've got a bearish engulfing, and it's starting to cross below that 9-period moving average, which could lead to a slightly deeper pullback. But I'm treating it just like a typical pullback at this point in time, and doing, the same things I do for a normal technical expectation. I don't know how much bigger the news is going to make this, or if people will, create more panic. If the market will have a negative reaction to this, but you've got early warning signs right now, and you don't need to overreact. You just need to start being proactive with your portfolio.
So, yeah, and then as usual, darn it, I agree with Noah. It's amazing. He lives in my head all the time. If I still had a head.
Well, that's because I plant seeds in your head when you're not.
I
looking.
know
I
you
got
do.
Jedi mind trickery going on.
I've got my spies. I know.
All right,
I know you do. The one other thing, is more than changing philosophically. I'm not afraid to, hey, there might be a little more volatility. And maybe I'm right, maybe I'm wrong, but if I expect a little more volatility, that's certainly going to get me, taking smaller position sizes on delta plays. Like Noah, I'll be looking at this as a bullish retracement opportunity until I have reason to believe otherwise. I mean, for goodness sakes, we've all wanted a retracement forever. It always cracks me up. Everybody always wants a retracement. The first red candle, they don't want a retracement anymore. So, and it just seems to be traders in action. So
well, I'm old enough to remember when the market retraced on a regular basis.
Oh, you do?
Oh yeah. It's kind of crazy to see this actually, this kind of steady, slow grind up with the only occasional like 1 or 2 day blip on the radar.
Exactly. And we can still play, very similar to how we've been playing. We can still look at the high base break as because, hey, let's call it what it is. At this point, this is just a red candle, right? I mean, that's all that we've got going on here.
No, it's a big, scary red candle. Well, everybody panic.
That might be the case. And that's okay for a little bit. We're probably not buying on a day like this as technical traders, right? Most of us don't buy on, larger than what has been average red candles. But we could fire back on Monday and break through that little top that's developed over the course of the week. So that's still very much in play. And for me, that's always oh yeah, this really was a big nothing burger, and people who know me know I believe this. Usually it's a nothing burger, right? The most likely thing to happen is, what's been happening is how I approach trading. And I don't try to use my brain.
Doesn't Beyond Meat make the nothing burger there?
That is true. We're going to have to find something else before they get at us for stealing their name.
All right. So a week ago, if you'd have said a week ago, what's going to be the major story we're talking about on Friday, we would have all said earnings, correct?
Yeah. Yeah.
All right. So has the coronavirus officially supplanted earnings? Because we're right in the heart. Next week will be the heart of earnings season. Frank, I think you were saying in pre-production that 160 S&P S&P 500
140, 145-ish.
So a ton of S&P 500 companies report next week. So we were all anticipating.
And they're bigs. They're real names. They're Apple, Microsoft, Amazon, Facebook. I mean, they're the big names. So, and I don't know, this week, next week, I think maybe the, earnings can take back control. Those are so
next week, what are we going to be talking about? Are we going to be talking about the coronavirus, or are we going to be talking about earnings? I mean, what's the bigger impact on the market potentially in the coming weeks? I'm going to throw that out.
I will say if we see continued selling, it'll be the coronavirus. If we break out, it'll be positive earnings. So, and I don't know which one it will be, but I think that will be the headline either way.
Way to take both sides of the coin there.
Well, isn't that what we're supposed to do as traders? Wait, where's my sell signal? Where's my break? Where's my buy signal?
I mean, right? Expand on that. What about you, Noah? Let me think. Because I've been debating this all morning. like how to approach, because we've had easy market conditions for 3 months.
We have.
Easy.
It's been real easy.
This is the first time in 3 months I'm pausing as far as analyzing, giving my 2 cents, sharing my thoughts. It's the first time I've paused in my thought process in 3 months.
See, for me personally, I actually had the Iranian, the escalation there kind of get me a little bit more nervous. And just looking at the market, I see a similar pattern emerging with this. And I don't know that it's going to be any bigger. Obviously, we have to see how that plays out. But one of the things I've noticed here is, we had this expanding kind of megaphone pattern form back when we had the Iran escalation. And then here we are, we're seeing exact same kind of version of that, where the highs still seem to have gotten higher, but the lows have gotten lower. And it's a shift to volatility and uncertainty that will play out one way or the other. I can see it playing to the upside. I can see it playing to the downside. And I agree with what Frank said earlier. If this news story continues to proliferate, like I just took a look, just looked at some of the headline news, and it's definitely, I would say it's dominating the news cycle at the moment. Will that,
100%.
and if that continues into next week, I expect more volatility based off of that. But if it blows over and, these cases where people are worried, we've got, 2 unconfirmed cases or whatnot, 3 unconfirmed cases. If that subsides, then I think we will just find ourselves come Wednesday or Thursday next week, just looking at earnings and results.
I mean, because in many ways, the market right now is at the mercy of this virus. I mean, if it expands, it's going to only stoke fears. If the CDC comes out and says, hey, we got it all under control, market's going to pop, right?
Most likely. I don't think it's got to be black and white there, but most likely, yeah.
Fantastic.
So, I think at first it'll, the first is always the scariest, right? And then, we get what appears to be a pullback. You get the bulls coming back in. It's if that fails that I think we have to be scared. So, the first, because we digest news pretty quick, right? That's just how trading is kind of what it's turned into, right? We kind of just take one story to the next. Maybe it's because there's always something else, but maybe it's just because we're used to it. So for me, that's, really, I would expect the volatility more than the, bloodbath or whatever, until we actually break some support. And we have to create a higher level of support before we can break that higher level of support.
So according to David in the chat, the coronavirus isn't even in the top 10 searches for the day. Basketball and Grey's Anatomy. How is Grey's Anatomy still at the top of the search?
Well, and that's an important, seriously, because I keep thinking and trying to draw parallels from the virus scare we had, 3, 4, 5 years ago, whenever that was, where the market dropped 10%. We've referenced that a few times in the show this week, where you had this big, huge, gigantic 10% drop. Regular everyday people that could care less about the market, even though their 401k and their retirement is all tied up into it, but they don't spend any time thinking about it. Your average citizen was spending a lot of time searching, thinking, scared about it. So until it breaks the mainstream, I think that's an excellent thought point. Until your average person that doesn't think about the market start searching, worrying, discussing it, it's going to be probably hard for there to be real fear.
Well, and it's not even the real fear I worried about it. For me, it's just enough fear to trigger algorithms. That's really all I kind of look at it now, is I think the market's become overly sensitized to the news, not because people are more sensitive to the news, but because the algorithms have a tipping point, like the gap fill, for example, crossing below that 9-period moving average, taking out, a key price level, that could trigger more selling, which just then accentuates the cycle, and it becomes just a self-fulfilling prophecy because the algorithms all start firing in synchronicity. So, that's and that usually leads to just a hypersynchronous drop for a couple of days, and then it's over. So, but it could certainly stoke fears if the algorithms start triggering.
Yeah, I think, and I think that's probably the best way to go into it. That's always my opinion on news. I don't want to spend this much time trying to figure it out, because we could talk all day and still come to no answer, right?
Yeah.
No one knows the future. And so that's why I kind of just, I'm aware of it. Yeah, that could be something that sparks volatility. That could be something that brings us some, some selling and some fear, at least in the shorter term. But until I see it, I mean, again, as a whole, who's buying on this candle anyway? Forget about what the news is or isn't. This isn't a candle. Technical traders, or maybe day traders are, but swing traders, we don't buy on a candle like this, right? So most likely it's business as usual, because again, it usually is. We prepare otherwise, whatever that means. If we want to tighten stops, add hedges, not set up any trades, it's a good time anyway. That's not like, for me at least, I don't do a lot of swing trading during earnings season, because there's always a gap that messes it up, or an earnings 3 days away that keeps me out of the trade anyway. So it's a good time if it's going to be this for me.
All right, I think that is some wise advice. Obviously, we'll continue to monitor it, but stocks are not the only thing in which the coronavirus is heading into. Let's go to oil. Let's go to oil. If you think the headlines on the coronavirus are dominating stock headlines, every news feed I have concerning oil, oh my goodness, it's all oil traders are talking about. Stocks are, they're U.S. centric. Oil is this global demand. And so while its impact on U.S. companies might be one thing, oil traders are just absolutely dominating the thought, dominating the discussion. We talked about the technical break in oil the last 3 days, and when it broke support, broke the 200. Fear is definitely alive and well in the oil market. Give me a look at this chart. Tell me what you're thinking, just from a technical perspective, first and foremost.
Well, I mean, one, is it rational? How much would something like this affect actual oil inventories and consumption and things of that nature? I mean, could it cause a slowdown? Sure. But I think one of the things that's really interesting is, I think anytime you see technical selling, regardless of the cause, which is usually just extra inventory coming in and people selling, we want to have a reason for it. And so we seek a reason for it. And so if that happens to be the news of the moment that they can grasp onto to give it a meaning behind the technical selling, I mean, it could just be a purely technical movement. It broke the 200 period moving average. It broke a key support zone. Once that starts happening, it just starts triggering selling pressure. And then maybe it self-feeds itself. But this is, rushing down, tons of momentum down into 54. I think your next stop's 52-ish before you start seeing shorts covering. And that's usually how a bottom starts. It's not the bulls buying in because they're confident. It's the bears buying to close to cover their positions and take a profit. And so that'll slow it down at some point in time, just the bearish profit taking. And it may move independently of whatever news and information that, that's adding into that I don't know if you call it paranoia or what do you call it when you psychosomatic symptoms. I'm having psychosomatic symptoms that I have got the coronavirus because I saw it in the news cycle. And so that's what's going on here. The market's panicking for no reason.
Self-fulfilling prophecy.
Yeah, and to add to what Noah said, I mean, where's the reason for a buyer, right? I mean, Noah said it bad. I mean, whatever number we're calling it, everybody sees that 51, 52 range, right? And so, I want to buy crude. I don't, but maybe I will in the future. If I buy it here, I'm thinking I've got to be willing to sit through a drop below that support. So why not sit through it and see what happens, right? And so, there's just not a good technical reason. Again, maybe it's, you can what happened first, the break or the fear and then the break, but there's just really not a great technical reason to buy. And so why would you based off of those technicals?
Can you still momentum trade this to the downside and take the short side of that?
Intraday, probably. Swing, probably not. I think you really do have to respect that 52 zone. I think we have ample evidence to suggest that other people do. And so at this point in time, risk to reward from a swing perspective would probably be poor at best. Intraday, that's a different story altogether, though, because I would expect, until we see reversal signals, that we do inch our way closer, whether it's fast or slow, to that support zone.
I mean, the thing about oil is China is a huge oil consumer. I mean, just a massive oil consumer. And you've seen this in the trade war over the last 2 years. When the trade war escalated, because China was involved, oil took a big dive. You know, this coronavirus, China is front and center. So, you know, the headlines and everything I'm reading, if you have this massive, you know, outbreak in China, oil traders are scared of that. You know, like it is. I think there could be a real opportunity if China says we got this under control, and it de-escalates dramatically, and then you have a nice technical reversal signal. I think there's a real possibility in oil, but that's a lot of ifs.
Well, that is a lot of ifs, and I have in my playbook, I have a look at oil in the spring mentality every year, and it usually finds a bottom sometime between February and March, and it tends to be pretty bullish from March through about June. And if you look back over its track record and seasonality, it's got a pretty good track record. Now, that doesn't mean it's going to work this year. It just means I think this creates an interesting buying opportunity. I agree with Mark. Could this create, you know, the drop in the price point down into a support zone? It sets up a reversal pattern and sets up an opportunity for the longs to buy into what's normally an increase in consumption as we head into warmer weather in the Northern Hemisphere. And so that's one of the reasons there's a cycle in there is they shift formulas from cold weather to warm weather formulas in the Northern Hemisphere. And again, our consumption picks up as we head into summertime. Peak consumption is usually around July. And so, you know, there's the cyclical run in oil. It doesn't work every year, but if you go back and look at the track record, it's like 8 out of the last 10 years. It's 15 out of the last 20 years. It's a consistent number that I look for. And so I'm interested in watching this over the next couple of weeks and months. And I'm not in a hurry. I'm not going to catch a falling knife on this by any stretch of the imagination. I'm going to wait for a reversal pattern to set up and then, you know, take an estimated, you know, calculated risk on it if it sets up.
Yeah. And that makes a ton of sense. Until then, I'm going to take one from Maddie and said it's untradeable as a bull until we start to see that. But the thought process and logic, you sold me. I'm going to be looking for a bottom in the weeks to come at that support unless it breaks. Then I'm going to.
You could probably sell me on shorting this another 2 points on an intraday trigger. I think that's an interesting scenario because I think there's a ton of energy and momentum to the downside, and I don't see it slowing down until it gets to that 52, 51 zone.
Yeah, that zone should be really interesting. That should be a heck of a battle. That will probably give us a lot of information on how fearful those traders really are, because it's easy to sell when there's plenty of technical reasons to sell. It's a lot tougher to sell at these big old levels of support. So that's a very important battle that we likely have coming up.
No, I think that's all great advice. I think that is all great advice. Like it's hard to gauge the fear when we're in technical bearish signals anyways. You know, what happens when it hits support? And that's why we wait for confirmation, even if we're looking to buy, right?
Yep.
That's why we look for, so obviously, but hey, you know, whenever there's a big news headline that scaring stocks, scaring oil, that oftentimes has a positive impact on gold. Let's go take a look at gold.
It's like I was itching to go here. It's like
whereas there have been technical reasons to sell oil the last few days to the downside, and as a reminder, hey, as traders, guess what? You can make money in both directions. Sometimes we forget that in robust bullish markets, but you can. But we've had a nice bullish technical setup developing that we've been talking about on gold, and it looks like some triggers have been occurring over the last 24 hours.
Yeah, it's a beauty. We've got a big fat support resistance neighborhood here in that 1550 zone after popping up to new highs. And again, some of this was driven by a couple of weeks back, the fear in Iran. You saw that pop up to that 1613 high temporarily, and then it started giving up that gain and pulling back down to support. It created a nice rounding bottom on the daily chart here. And we have that confirmation back up, and it's taking out and trading above previous candle highs. And so if we switch that intraday and go down and look at that on an intraday time frame, you're actually seeing higher highs and higher lows and an uptrend form on that. And that's, I'm on a 1 minute chart. I never go down that low. That was happenstance, but you're seeing higher highs and higher lows, where you're starting to see it creep up and take out resistance points. And that's the confirmation you need to see, is that upward movement in price. Now, will it follow through? I think the chart pattern suggests that it's got that upside potential. From the weekly chart perspective, it's a nice little breakout to an upside. It's still showing that upper shadow on the weekly candle, but I think there's upside room here, at least to 1650, maybe 1700, just because those big fat numbers are really important to this commodity. If you go back and look at all the support resistance zones, they tend to bounce around those 15, the big fat zeros and 50 numbers. So 16, 1450, 1500, 1550, so on and so forth. I think this is a beautiful setup. I like it. And if you're a directional trader, you can look for that directional move. But again, we mentioned this yesterday. We talked about this. What about just credit spreads down below support, a less aggressive move, to try to take some cash flow off of that overall bullish sentiment without being overly bullish directional?
No, absolutely.
I'm sold on that. I love the idea.
No, I mean, gold just always acts whenever you have these big, whether you look at, when you look at the last couple of years, trade war, geopolitical event sends gold up. The Iraq situation, Iraq-Iran situation send gold up. Seeing a little bit of bump on the corona. A nice reminder that when the news headlines are getting dominated by something that's scaring things, that's almost always bullish for gold. Almost always. It's hard to have surprise news headlines to the downside for gold on a geopolitical level.
Gold cures coronavirus.
I guess that's a possibility.
If I wrote that headline, somebody would start believing it.
Someone would click it.
Noah, king of the geopolitical dad joke.
Yeah. It's good to be the king.
All right. So in the midst of all of these, this big storyline happening, companies are still reporting earnings. Let's go to Intel, INTC, reporting better than expected earnings today. Nice little gap up.
Damn.
Yeah.
Here's a big company, widely followed, widely traded, had a little breakout occur pre-earnings, which is hard to trade unless you're day trading it. But here we are, big, robust. Where are we from a historical? Let's go to like a 10, 20 year. What do we do? So we're approaching bubble highs on Intel 20 years later. But for all intents,
there's somebody out there who's really excited that Intel's finally getting back to the price they bought it at 20 years ago.
They wrote it the entire way.
Absolutely.
They wrote it the entire way. But what do we do here? Because this is going to happen a lot next week, where you have companies that do well on earnings. You gap up into this no resistance area, for all intents and purposes, clear air. How do you trade it? How do you approach it? What do you do with companies like this?
This is a tougher one. What I do in this situation when you get a gap post earnings is I treat it like a gap play in general. I drop it down into a smaller time frame. And then I trade the signals down on that smaller time frame, where I'll get down in there and say, okay, it gapped up. It's now established a daily high. It's now established an intraday low. And if it takes out the high, I'll buy and I'll trail a stop loss. If it starts to take out the low and fill the gap, I'll trade it into the gap. But I don't try and predict it. It becomes a binary if-then scenario, where if it takes out the initial high, then I will buy with a trail stop. But if it doesn't, then I won't. If it takes out the low and starts to fill the gap, I will take a position into the gap with a trail stop. But it has to give me that reaction. And this is a pretty big candle on the daily chart. So that's one, where I just have to watch and wait. And this has got all the upside momentum right now. But who knows, by the end of the day, that might have a big, long shadow and a very small body down at the bottom, which might suggest it's going to fill that gap. Earnings responses people tend to overreact to the news. And, maybe you get something like you saw last earnings announcement, where it gapped up and then it high based and then traded up. I don't know how I just don't like trading it right out of there saying, oh, it gapped up, I got to get in right now. I don't have that.
Uh-oh.
And there's no
there goes the king.
No.
There goes the king. Frozen in time for
Here,
forever.
tag me in, guys. Tag me in like wrestling. Tag me in.
So there you go, Dave. You are. No, he's
tagged in.
back.
All right,
He heard.
sweet.
So am I no longer the king? Am I still here? Can you guys
you're
hear
now
me now?
back.
Oh, we
You're
got you back.
It's really weird because I could hear everything you're saying. I didn't know I was frozen. I'm just like, oh, there goes Noah. I'm like, what did I do? What is this? Great.
I was about to pull a suplex, guys. Gosh.
So there you go. So basically, the effectively what we oftentimes just call the momentum play. Is that fair to say, Noah?
That is exactly what it is. It's a momentum play or a gap fill.
So
And it's you don't know about it. When a gap, it's either going to be a common gap, which fills, or occasionally you get those runaway gaps where it gaps and then it runs. And I don't try to predict it. It's simply, for me, it's a game of watch for the stimulus and then have the response.
Yeah, that's see, I played a little different. I completely understand that logic. I actually look for what happened last time on Intel, although last time didn't work because we were right below that major resistance, the big selling point. But basically, pop up, create a little bit of a high base. It can be anywhere from 2 days to 2 weeks, and look to play the break out on that side. That was actually a good setup, but the risk reward was pretty ugly back there last time because of that high that we had back in April. And I'm not going to buy at resistance or anything like that, but that's my preferred style. The only exception that I really have is when it's smashing into a major, and I'm sure there has been some, but I've not seen any that jump out to me this quarter thus far. But when it gaps right into that major level of resistance or support and has to make a decision on the open, break it or fail. And that is the only momentum style post earnings play that I actually like. And they don't happen very often. I try to put them on Twitter, over on Tackle's Twitter when I find them, but they're fairly rare. They're kind of unicorns.
Now, I'm sure there are members of the Tackle community that own Intel that have used it as cash flow. I remember we were all over it when it was low basing a while back. What do you do with covered calls in this situation? Let's say you went into earnings, you just held, look into cash flow after earnings.
Well, if I had a covered call, I probably am getting called out at this point in time.
But what if you didn't? What if you
didn't? Well, wait.
Yeah, what's the strike?
Yeah.
So, because it looked like it was about 75 was that all-time high, and I will assume that folks at Intel will remember that, as we approach that.
Well, even if they don't remember it, those who study their charts will reference it. It becomes a self-referencing point.
We're talking. Yeah, we're already referencing it, and so like every time we reference Intel from this point, and other analysts, they'll be like, "Hey, all-time highs, $75."
Yeah, it's probably not exactly 75, just what it looks like to my half-blind eyes. So
just half-blind. All right.
Just half-blind.
Also reporting earnings today: American Express, AXP. Let's go take a look at the chart. AXP. Now, credit card companies have been doing well for a long time now. A long time. We got gap up, but going the opposite direction. So 2 situations, 2 gap ups, 2 different tells of the tape after the bell opened.
So these are always interesting. Where you get a gap up off the earnings. It's clearly they had a good news. Everybody liked it, but you're seeing immediate profit taking. When I expect this to backfill. With this initial candle, with that, just initial, reaction, I suspect this will fill the gap, and then that'll put you into a nice little bull pullback type scenario. And it may take a week or 2 to form up, but I'll do something like sometimes what I'll do on a situation like this is I'll look and I'll actually take a bearish position by doing something a little bit more aggressive that I wouldn't recommend for a beginner, but I'll sell calls. And if it continues to drop, I'll have a profitable position on the calls, and I'll maybe turn it into a ratio or something. But if I'm wrong and it starts to run up, you just buy the stock and you're in a covered call. But you have to have a game plan around it, and you can create a bearish position on that. Again, this is, I think, just based off of that technical signal, to me that looks like one that would give a gap fill.
So a little gap fill and then form a support at that old resistance level. Like I always like to have the ideal plan. Like what would I love to have happen from a trading perspective? Like, so fill the gap, sell off over the next few days, find support at that old resistance level, and then give you a bullish signal to the upside. Is that our ideal?
That's always what I love
nice.
that, because
the 9 kind of catching up along the way.
Yep. That's
All right.
exactly. And that's one of the things I've noticed is when people become more confident and competent with their technical analysis is when they're actually thinking ahead of the market, like a game of chess. Like you can picture the chart. You can picture what that might look like in your head right now. Like you can see, okay, a couple of red candles down into that support zone. And I probably drew those a little off, but as that 9-period moving average catches up and it fills that gap. Now imagine you get a green hammer candle in that ballpark. You can picture it now, and you can say, okay, well, that would be the ideal setup right there. After, because they clearly had good news, they clearly beat earnings. People really liked it. There's just profit taking that causes that gap to fill. An initial knee-jerk reaction. And to me, it's almost like the market shows its cards. Like with that bullish response, like, yeah, they really liked it. And then the profit taking kicks in. And then if you miss the pop, you wait for the drop.
And this is the type of analysis and talk and discussion that we have internally as coaches. And those are like, who knows if that's what we get? Maybe we get it, maybe we don't. But if we do get it, those are the types of setups that we have every week on the scouting reports. This is why our pro members love those scouting reports. This is why if you're not a pro member, sign up for that free trial today. We got another batch coming tomorrow. We're going to be meeting all afternoon with colorful language and dialogue and calling each other stupid and then calling each other brilliant.
You're stupid.
And the result of those hours of conversation result in our scouting report picks, where we look for those setups, where we check our own watch list. Sign up to be a pro member today. Those scouting reports are at the heart and center where we get those for you, where we get these for you. Let's go to another credit card company. Not having as good as day. Discover Financial, DFS.
It went down.
It went down. Like, reminder, earnings cuts both ways. Earnings cuts both ways. What do we see from a technical perspective, boys?
That's a big gap down, and you're seeing a high wave candle with long shadows on both sides and a small body. And so it's come down into a known support zone ballpark near 75-ish, 70, 76. And that becomes a natural buy point for people, but it's got all this downward momentum off the gap and a huge spike. This is a good example of, I wouldn't consider a short on this unless it broke 75 support. I wouldn't consider a long on this unless it started to fill a gap. I would have to take out the intraday high it established. And then from there, how bad was their earnings? What really was behind this? Was it a little disappointing, or did they lower guidance? Did they change, the outlook? Because that information is important. And so that's the most important thing about earnings that people have to remember is it's not just how they did, it's what that forward-looking estimate and forecast is going to be, that guidance that they give. And if they pull back on their guidance, well, then, that's going to, cast a little shadow of doubt over it. But if they just had a miss on earnings, but they still maintain forward-looking guidance, that's got a good chance of filling that gap as well. So you'd watch and wait for it and see if it actually crosses into the gap, wait for that confirmation, then pull the trigger.
Anything to add, Frankie?
No. The trade I'd be looking for is the drift down into that support zone that Noah pointed out around 75. Little bit of a rally, creating a lower high, and then breaking through that support. So this would be on my bear watch list, at least from a technical. Like Noah said, digging in a little bit, seeing if I agree that those earnings were scary enough. It'd be something I'd be interested in. I wouldn't put a ton of weight into it, but that would be the trade. If it's on the buy side of things, I'd much rather buy into upside momentum than trying to I'm not a bottom fisher though, as most of you guys know. So this would be, let's chill a little bit. Let's put in a little bit of a bearish break. Let's take that thing out and let's have a nice free fall to 70.
All right. Final stock to look at, a reminder that, hey, when you have news out of China, I mean, if you haven't learned this lesson from the trade war, let's go to BABA. So with BABA, like you have, once again, a company that was a nice trend, all of a sudden coronavirus hits, and, news headlines out on BABA say that there's concern of Chinese consumption amid a clampdown of travel and public celebrations. Widespread closure of movie theaters in other places of mass gatherings.
Did you see they closed Disney in China?
I did.
I mean, but that's the kind of thing and so like if you have public consumption within an area of the world that all of a sudden is getting clamped down, this is really, looking at potential impact on Chinese stocks, and a lot of people like China trading Chinese stocks. BABA was on a great run following trade war resolution, like, you know, nice breakout, nice trend, and then boom, as soon as that coronavirus hit, I mean, look at the impact it's had on the chart.
Yeah.
What do you see from a technical perspective?
This is a really good example of your gap fill. Well, apparently my internet's connection is unstable for some reason, but this is where you're talking about those pockets where, you know, between the moving averages, now that it's broken down below the 20, you got a lot of room down to that 50 period moving average and not a lot to hold it up. There's a minor support zone at 210-ish. But it's just a minor support zone from just one minor pivot cycle. And that's, you know, that's not that big of a support zone. If it were to drop a little deeper between that 50 period moving average, you got a little bit more significant support zone down at that, and between 205 and maybe as low as 200, just as a big number. But that's, again, a big candle. And once again, it crosses that moving average, you got that pocket that tends to fill. So that's a good example of how that news responds. And then you don't have earnings coming out on that until the 13th. And, you know, from a weekly perspective, 205's that moving average, rising moving average, and that old resistance zone from back in 2018. That's where I would look for a buy setup, especially if this, you know, scary news blows over.
Yeah, I mean, I'm just, you know, once again, you plan ahead, and if the news headlines turn and the Chinese health organizations say, hey, it's all good, there's no new cases, things seems to be abiding, then all of a sudden areas like gold or like, and who knows how long this retracement, pullback, sell off on BABA occurs. I mean, who knows what the setup looks like when that happens? But finding those areas that get beat up on a news event, and then when that news event is lifted, I mean, just look at the trade war on BABA. Look at the great trading opportunity that was there on BABA when the trade war went away. I think there might be a similar situation occur down the line with the coronavirus and a lot of these Chinese stocks that are really getting beat up right now. It's a kind of a really huge sell-off day today.
Sure.
Well, thank you, gentlemen. Thank you for your analysis and input.
I work hard at it so that I can be here and give you guys random thoughts.
Dave dubbed you the Glitch King, by the way. I don't know if you noticed.
Am I Glitch King now?
But I was enjoying that.
Like the Lynch King.
There you go.
All right. Well, content we have coming up on Tackle Trading in the next 24 hours. We have a Women in Trading tonight. Tonight, the 24th, Friday night, Women in Trading, always a popular event. We'll send out an email later today giving you a link for that. We also have, I do my commodities report. Tomorrow I'm going to do it at 1 o'clock Eastern, an hour later than I normally do. 1 o'clock Eastern. Send me if you want any more information on that. Team at Tackle Trading, same link we've been using the last few weeks. But we'll go more into depth into oil, gold, and natural gas. And then, of course, stock, options, Forex, commodities, newsletter, like we release every Saturday. And y'all are going to be in the meeting tonight, this afternoon, giving your input on the picks. Like you always do, right?
Absolutely.
Of course. And have fun, Emily, and all of our awesome women in trading here on tonight. I will have the spies out there. You know who you are. So, but I hear nothing but awesome things about that women in trading group. So you ladies have fun and have a good time in there. And if you're new to Tackle Trading, every Monday night at 8:30 Eastern, I do a welcoming onboarding webinar where we kind of work through the site, talk a little bit about daily routines. Or if you're a new trader, you're just getting back into things and feel like you could use a little help, you're always welcome to join me in that Monday night webinar. You'll find the information. You can email Mark, or you'll find it over on Tackle Trading as well.
Everyone, great show, guys. Some good stuff. I'm going to be looking for that potential setup in AXP. I'm excited for that to develop.
I like that as well.
I really like that potential setup on company that's had a good year.
Yeah, that reasonable pullback into the 130 zone over the course of a week and a half could be interesting for sure.
All right, everyone, have a wonderful day. We'll catch you on Monday.
Thanks, everybody. Have a great weekend, Halftime Crew.